trade wars and mortgage rates. How's that work? Okay, seriously. Like, that's what the tariffs are. That's what the whole discussion of tariffs is. It's a trade war. It's about we're going to produce goods in our own country by giving you tariffs on goods from your country, and then you're going to retaliate, and on and on and on. So that's the whole Trump tariff concept. Is it's designed to create more jobs in the United States by charging goods coming in from another country 25% extra to enter the country. And the people who pay for it are Americans. But let's just back off for a second. We don't know what's going to happen. First, Trump said it would be on the inauguration day, and it wasn't. And then he said the other day, he's sitting in his chair, and he says, maybe February 1st. That's going to be February 1st. Who knows? Like, seriously. Here's what I will tell you. There will be some tariffs eventually, because Trump had tariffs before. Trump put tariffs on Canadian goods, Mexican goods, Chinese goods. Absolutely, he did it. It happened. By the way, Biden kept some of them. That's right. It's true. Biden kept some of these tariffs. So there will be tariffs. And it's the whole tariffs was one of the most important parts of his whole campaign platform. He said it about 1,000 times in 1,000 speeches. So there probably will be some tariffs. Well, how do they affect mortgage rates? Okay, let's break it down. Basically, if there was no tariffs, if there was never any discussion of tariffs, you go variable, because variable is going down, and it will go down. It's just next week. Next week on the 29th, the Bank of Canada will drop its lending rate by another 25 basis points, and then the commercial bank rate will come down, and variable rate mortgages will come down. That's what's going to happen. So, okay, how's it work? All right, today commercial bank prime is 5.45. Variable rates are around 1% to 1.2% off that. So I got a variable rate in the fours. But after next Wednesday, the 29th, there will be down in the low fours. Like, there will be some rates available for CMHC mortgages at 3.95, 4%. There will be average of those variable rates will be somewhere between 4.15 and 4.3. So those are decent rates. By the way, everybody should know this. The most common mortgage rate in the United States is about 7.19 right now. So, that's what's on offer. If you want to buy a house in the States right now, that's what it is. It's much higher than here. So what about fixed rates? Fixed rates are right now running in the range of about 409 to 459, somewhere in there. That's a 5-year fixed. Oh, by the way, Butler Mortgage, yours truly, has a special on right now, and it's just insane. The rate's just crazy. We're offering a 5-year fixed, again, just for CMHC purchases. Just if you're going out and buying a house with less than 20% down and you qualify for CMHC, 3.79. Yeah, honestly, 3.79 5-year fixed. 3-year, 3.94 high ratio purchase. Yeah, crazy, right? 379. There's been a 379 rate for like 3 years. It's ridiculous. But that's just us. So how do these tariffs or Trump's threats or trade wars affect these mortgage rates? Well, there's two ways, and they both conflict. Firstly, tariffs on Canadian goods are terrible for the Canadian economy. Terrible, particularly in the automotive world. If every auto part and automobile that's manufactured in Canada is suddenly tariffed at 25%, it's just bloodshed. I mean, it's just disastrous. The estimates are the Canadian economy shrinks by 2.9 to 3.5%. It's a complete recession, total disaster. 100,000 people laid off right off the hop. It's a complete disaster. And that would normally cause the Bank of Canada to go lower. Yeah, exactly. The Bank of Canada would adopt emergency rates, would drop probably 75 basis points, and that would be ridiculously low variable rates now. Every variable rate would start with a 3, maybe go as low as 2.95. I mean, it would be really a tremendous, the economy would be destroyed, but the interest rates would fall. However, fixed rates would probably bump up because there's a recognition that inflation is probably going to come back. Why would inflation come back? Because the Canadian government's policy, as stated, and even under a new conservative government, Their policy would be counter tariffs. In other words, that if there's a tariff on Canadian goods crossing the border, that our government would impose tariffs on Canadian goods going to the United States. Sorry, on American goods coming to Canada. American goods coming to Canada would have a counter tariff. So Trump's got a tariff on goods coming to the US. Our government puts on a tariff on goods coming to Canada. And that is ridiculous. Like, that would be like orange juice goes up 25% overnight, and a whole bunch of other things, like all kinds of different products would suddenly jump because we do a tremendous amount of trade with the United States. Inflation would reignite, like seriously, like all kinds of grocery items going up 25% in one day. Holy moly, that's crazy. So that would there'd be sort of a counter reaction. As much as the Bank of Canada wants to drop rates, there would be this effect of a vastly increased inflation. Takes time though; it doesn't happen overnight. So it would be sort of a counterbalance. It'd be the bad economy. The Bank of Canada wants to drop rates, inflation rising. Bank of Canada having a hard time dropping rates, but there would initially be a big rate drop. So what would happen to fixed rates? All hell would happen to fixed rates. Fixed rates probably go up because the fixed rates are based on 5-year bond yields, and the expectation of inflation would drive bond yields up significantly. We'd probably go back up to 5% or mid 5% interest rates. So it's pretty chaotic, right? I mean, that is true. It's very chaotic, and we don't know what's going to happen. Trump said Feb 1st. Who the hell knows? I mean, when he finally gets around to it, he'll get around to something someday. We just don't know how much or when. But right now, the only clear indication is Canadian economy, particularly Ontario-based recession. The Canadian economy falters. The Bank of Canada drops rates. So you go variable for today.